10 more.
Yep. True.
All right. Good morning. It's Friday.
I like Fridays. I don't know why, because Saturday and Sunday come and I work anyway.
Yeah. It's funny because I was telling somebody else, I'm working more now than I did during the really busy times.
The 21s.
Yeah.
The 21s.
21s. Back then I did a lot of stuff, but I had more help.
Yep.
Yeah. Now it's like, okay.
Now you're doing all of it.
Well, a lot of it, not all of it, because we still have the other stuff. It's just, I got all these podcasts, other stuff that need to be edited, and you know how it is, and video, but I'm getting I rearranged how I'm getting to people, and it's amazing the difference. And a lot of people want to buy, and they're getting ready to. So it's going to be a busy year next year.
Gotcha.
So that's what I'm thinking.
Well, I believe it's going to be a busy year next year.
Yeah. Even though I don't know if you saw, but the Federal Reserve came out, the Fed, and said they see their properties are going to go down 20% next year. It's like, really?
How can you predict that?
Right. Well, and that's because that COVID and the pandemic spurred the economy. It's like, no, you did.
Right.
You bought trillions of dollars of freaking mortgage-backed securities and dropped those numbers so low, so it spurred such amount of people to go out and get loans.
Right.
You caused this, and now you're trying to say, well, this is potentially what could happen.
Look over there.
Well, if you keep saying it, it's going to happen.
Right.
Right.
Yeah.
People, I tell you.
Oh, that's how I have to live my life. To just keep saying it, it'll happen.
That's right.
Okay, got it. See ya.
I'll be thinner.
Look at me now.
That's right.
I'm fatter.
Yeah. I guess I got to stop doing the drinking at night and all the other stuff, right? Mm-hmm. Yeah. Well, that's not.
Well, that's
happen.
What they say.
Yeah.
But there's also your soul.
Right. Well, it's nice to have a drink occasionally.
Yep.
Right.
Chillax.
Can you take over the show for a second? Because my wife's calling me. So
I'll take over the show for a second. So this weekend again, it's going to be a pretty weekend, and there are already a lot of open houses scheduled for the weekend. I know through our office. That's Remax Executive in Modesto, California. So get out there, take a look at the property, buy the property, close escrow on the property,
own
a home.
I apologize.
It's going to be a great day. That's okay. It's happened before.
Well, it's a butt dial. Oh. It was even worse.
I didn't want to talk to you.
Yeah. Well, the thing is, we have air conditioning guys coming that we had on the radio show, Kevin Jordan, Air and Heat, and they're putting in filters and then this UV system up in the air compressor,
to kill all those Germans.
Yeah. And because I was talking to him because this kid has asthma and all this other stuff, and it doesn't have an issue at the house anymore. There's no dust. Mm-hmm. And he talked about it on the radio show. And so I'm like, okay, I want that. And so they're coming out today to put it in. Oh, cool. One of the questions is, we had such an old unit, from the 70s originally, and that was replaced. Well, of course, it was done through a home warranty. And this is what I talk about. I always say, get the buyout now. Right. The guy didn't update the wire. You didn't hook up the control wire.
Okay.
Because, there's 4 wires on the old ones, 5 today. I'm like, can you set when you're up there? Because I don't want to go on the roof. It was if it was down below, I could do that, but I don't want to go on the roof.
Right. I don't blame you.
Yeah, my fat ass will fall.
Well, what was it, 2 weeks ago, 3 weeks ago, I was up on the roof because I've got those damn locusts in my neighborhood. That's the name of a tree.
Oh, I was going to say, I thought you really had.
I
was worried about,
When I had Grover come out and trim the trees, the first thing the guy said when he stepped onto the pavement is, I hate locusts. And I said, I want to get rid of them, but the city won't let me. So can we trim them up, get rid of all that mistletoe? Anyway, they shed leaves year round.
Wow.
And so about 4 times a year, I got to go up on the roof and blow the leaves off the roof and blow the leaves out of the gutter. 61-year-old fat guy up there on the roof with a gas-powered blower strapped to his back. It's going to look interesting when I'm landing on my back.
Actually, I was thinking, we were at the Salvation Army thing yesterday, the kettle cook-off. I'm like, we should bring in reverse blowers and we could suck all the dollar bills as they're falling through the sky. Yeah. Get electric ones, of course.
I got pretty good. I kind of felt like, Kung Fu.
Did you?
Snatched a dollar out of the sky.
Well, where we were, it was not as many dropping straight down. They would have to fly. But all right. So one of the things we said we would talk about this week on today's show,
reverse mortgages.
Yeah. So I only want to go through it real quick. I'll only take 5 minutes. And if you don't need to know this, don't worry about it. We'll go through it, but maybe somebody else does.
Right.
All right. So let's share the screen.
The pluses.
All right. So real quick, reverse mortgages are called home equity conversion mortgage. But don't worry about it. That's HELOC. It's not a HELOC. It's HECM is what they call it. But and what I'm going to get in today, we're just going to talk really quick about the FHA. And then there's also a portfolio program that's totally different. Okay. All right. So basically, the first thing they tell you is explore other options before you take this, because this isn't for everybody.
Right.
But, they're going to say, maybe delay retirement and return back to work, sell your house, downsize, obtain an equity line of credit, which you don't want to do today, because that's what I'm doing. Most of the reverse mortgages I'm doing is paying those things off because those rates keep going up.
Gotcha.
Decrease your expenses and modify your lifestyle. Is that something you want to do?
No.
Otherwise, get a reverse mortgage. Yeah. I recommend, the only way to know if this is going to work for you is to get with somebody like myself, go through the numbers and see if it makes sense. A lot of people ask me, how do I know if I have enough equity? You figure that if you're 62 to 75 or 80, it's going to be between 50 and 60% of of the value of the house you can get. Heck, will let you pay off the existing mortgage. You can continue living your home. You maintain the title. They don't own it. You still own it. It's just a reverse. So instead of paying every month on a payment and the interest, you just add the interest onto your principal balance and it keeps going.
Right.
That's what people are very confused. They think, I don't own my house anymore. That's not the correct. You still own it. You can refinance it down the road and pay it off. You can sell the house. When you pass away, your heirs can do the same thing. Improve your monthly cash flow, fund necessary home improvements. That's the one thing, is if you have a roof issue and you have other stuff, that stuff will have to taken care of before you finalize on this.
Right.
Because you're going to have an appraisal done from FHA and they're going to look at everything.
And they are going to call things.
They can't, yes, because it's FHA. But I usually go through and tell you, paint that little thing right there. Because they look at, just like all FHA loans, they look at peeling paint. They look at if there's any dry rot, any bare wood, paint it, and then you don't have to. I had one that had underneath the sliding glass door, there's this piece of wood down there, and all the paint always comes off of it because the water hits it. People kick it, so they say take care of that.
Yeah, your threshold.
Again, what I just said, the benefits: gets rid of your mortgage, you can stay in the home. Your loan proceeds are not taxed as income. So if you sold your house and you bought a smaller house and you made a lot of equity into your pocket, that's income, right?
Right.
That's capital gains.
Right.
This, you can take the money out. So it's another way that people use it to offset family planning and giving money to the heirs early, right? And the other thing is, once you're done, you pass away and you go somewhere else, your heirs can refinance it, sell the home, or walk away, just whatever they want to do.
How easy is it for them to refinance it, and do the heirs need to be on title to do that?
Well, they're going to get it through, I assume, through a trust, right? And
hopefully.
Yes. So if you're doing this, the next step, put your property in a trust.
Okay,
so
that's where I was going.
So you can transfer it, because you can't have it in the trust to do these, but you can get it in the trust afterwards. And then because what happens then is whoever's in the trust gets the property, and you don't have to be on title. You're part of it, and then you can refinance it.
And you don't have to probate it and sell it.
Right. Exactly.
Right.
Well, that's why you want a trust that has the will in it. If you just have a will, you'll have to go through probate.
Right.
The big key here is you got to be 62 years of age. That's the youngest person in the house that's on the loan. And you must live in that home as your primary residence.
That's okay.
Yeah.
Right.
Property is usually a 2 to 4 unit, could be a condo. Those are things you can talk to me about. That's not important right now. We're just kind of going over the program.
Right.
There is mortgage insurance. There's no prepayment penalty. You want to have both spouses on the loan. You don't want to say, well, I'm only 61, so we're going to take her off. Because then if one passes away, you only have a year to refinance it before that they're going to sell
and
it.
if you're in a crappy market.
Exactly. Not that we're going to be, but you never know.
I know.
And on FHA programs, there's a fixed and adjustable. The only way you can get the fix is say that you are allowed to you owe $356,000 on your home, and you're only getting $356,000 to pay that off. Then you can have a fixed rate. Otherwise, it's an adjustable, and that's how it is on all of them. And that's no matter where you go to get this. The Tom Selleck place, me, whatever. It's the same loan.
It is?
Yes.
Okay.
Yeah, it's FHA loan. It's the same loan everywhere. The only difference is some of us have portfolio loans, which allow you to have a fixed rate. It's going to be a higher interest rate, but you're able to get more up front in the first year.
Gotcha.
And there's ways you can get your money. You can get it the first year. You're only allowed 60% of whatever you're able to get, right? So say you're able to get 100. This is just an example, 150,000.
Right.
you can only get 60% of that 150,000 the first year. So they'll pay off what you owe and then add you can get the 15 grand extra that you get that year.
Mhm.
And then the residual 44,000 you get the next year.
Gotcha.
Okay. So they want to keep it. Used to be you could get it all
up front,
but then a lot of seniors were getting taken advantage of, and they, people were taking the money from them. They spent it all, and then they didn't have enough money. One of the things I didn't go over, I'm just go back over here since nobody is watching. I'll get it back over here. All right. So the most important thing is we said we'd go over it is here. The reverse mortgage is what's good about it is it benefits the right people, right?
Mhm.
I've had a lot of clients who it gave them their dignity back. They don't have to ask for family for money. They're on a fixed income. They only have Social Security, this, and now with inflation, it's really helped them. It's a great program if it works for you.
Right.
And I only wanted to get it out there because somebody asked about it on Wednesday.
Yeah. But that's the key word is if it works for you.
Right. It's not for everybody.
Right.
Yeah. I mean, it's not. A lot of people, that's the dumbest loan. Well, that's not for you. And that's okay. It's not everybody does a VA loan. Not everybody does FHA loan. Not everybody does a conventional loan. It's when you're in this market for real estate, whatever you're doing,
Mhm.
it's just we figure out what is the best program for you. And that's what our job is.
Yep.
Right.
Yep. That's true. Well, that was interesting. There was a couple things that I didn't understand completely. In
What's that?
Well, now that you can't take out the entire lump sum.
Right.
Okay. I had a client a long time ago, took out the entire lump sum, and this poor guy was grieving and having a hard time, and he was going through all his rentals and selling it and spending the money, just hoping that he's gonna, follow his wife and die real quick. And he outlived his money.
That happens.
Yeah. And he didn't expect to.
Right. And that's why they changed it. Also, you have to, there is a portfolio where you can get all your money the first year.
Yeah.
Right. But the other change that wasn't on there is you have to qualify now. We look at your credit score and we look at that you can pay your taxes and insurance, where before they didn't even care. And then what happens is taxes were foreclosed, insurance were that all of a sudden now the property is being foreclosed on and you're supposed to live there until you're 120 and
right.
now you're not.
Yeah.
So they changed it a while back, which a lot of companies stopped doing them because they changed. I think it was best what they did.
Right.
And now, and the one thing other people don't realize is when we quote you right now, right, we'll come out and we'll talk to you, you come in, whatever,
Mm-hmm.
you have to go to counseling. And then once you go talk to them, and that's by phone or you can go there, but most people do by phone. Then 7 days later, after your counseling appointment, you can actually start the process.
So they want you to fully understand the process.
Cooling off period is what they call it. It's and that's only in California.
Okay.
Not every state has that, because they say, oh, you can start right away. No, not in California has a 7 day.
Yeah. 7 days seems like a long time.
Well, I guess they think older people think it takes longer to think about things.
You're making fun of old people.
No, what I mean is they probably talk to their family. They
Yeah.
talk to other people. Because one of the biggest problems I have with people is your family doesn't need your house. They want you to be comfortable and survive. If they
Right.
want your house and you not to be comfortable and survive, you need a better family.
Exactly.
Yeah. So
Yeah.
take care of yourself. Don't
Choose your
worry
friends. Wisely. You
But-
can't choose family.
Right. And then, and a few of these we've done for protection of your home in case you're going to be sued or
Mhm.
something like that. Because when you look at the lien on the property, it's like double or triple what you're getting there. It's a much bigger lien. And so it looks like there's no equity in the home.
Right.
Because like if you're in the state of Florida or Texas, you're protected on your house.
Okay.
Automatically.
How so?
That's just their laws.
That's it.
Yeah. That's it.
Can't take my home.
There's like bankruptcy protection. That's why a lot of ball players and stuff will sell out of California, go buy a home in Florida or whatever, and then go bankrupt.
Plan ahead.
That's right. Get rid of all their debt. From
I spent all my money on all that Kvassier.
Everybody wanted all my money, and they're my best friends, and they took all my money.
Yeah, they did. And then now they don't have any friends.
No.
No money.
So, like I said, the FHA is a great program. A lot of people are doing it right now. It's the same for everybody. The one thing I was trying to explain, I was the 7 days, and then once you see that, we can't lock this loan until you're fully underwritten and ready to go to docs. Yeah, and you can lock it for 10 days.
So you can't lock and shop.
No,
because you're not shopping. You already
right.
got the home.
But I'm just saying. So when we quote you right now, it could be totally different in 4 weeks from now.
Right.
Yeah. And that's what people don't realize. Well, these people said they can give me this amount of money. Well, I can say whatever I want right now because it's not going to matter. But I kind of tell you really where it's at
Ballpark.
so that you know that we're pretty close exactly where the numbers are. So, yeah.
So what does it cost to do a reverse mortgage?
Well, everything that comes out of the numbers, the most expensive one is the FHA. Because it has the mortgage insurance on there.
Okay.
And in order to do these, that's the mortgage insurance allows them to be done this way. And a lot of people go, why would they want to do this? Because they make the interest.
Right.
Their whole goal is to make interest on this. And the longer they service the payment and the longer you live, the more interest they make. So it's a great program for them.
Yeah.
Right. The principal never goes away. You're only adding the interest on.
Right.
And that's what they make anyway. So.
Right. So it's a perfect loan for them.
Yes, exactly. It's a great loan.
Right.
And that's why a lot of the portfolio products were amazing. I like them. But when rates went up, now they're at like 10. Nobody, it's pretty expensive. When they start going back down, more of the portfolio products will come back.
Yeah.
Which is good because FHA only maxes out at like 970,000, right? Per sales price. The appraised value. Where the portfolio, when I was doing ones for 2 million and stuff.
My gosh.
Yeah, and so people were taking out, 1.2 million or 1.3 million on those things
and doing whatever they want with it.
Well,
go purchase property.
Right. Well, a lot of them just paid themselves back because they bought the property cash years ago, and now it's like I want my money. Portfolio. I want my money back just because I'm not going to be here forever.
Yeah.
Right. So it's a great program. But move on. Next.
We're not going to be here all forever.
Well, some of us
You just burst my bubble. You're going to be, right?
Yeah. I'll be haunting all of you.
Yeah, exactly.
My wife.
Oh, gosh.
I told her she's got to put me on the mantle.
If we could choose to do that.
Yeah, if we could choose to do that.
Well, I think it's going to be a gorgeous weekend. What's the weather say?
Cold.
What's cool, right?
I don't know.
Cold to me is below 32.
All right, so who do we have on the radio this weekend on Saturdays?
We have Amit.
Oh, that's right. We're doing the real estate show.
Beering.
A real estate law.
And we're going to talk about eminent domain and real estate law, contract law. Should be exciting.
Because that eminent domain I want to talk about with him is the one in Stanislaus County that's going on and how it works. And it takes a lot longer than they state it will, right? Because some people I was helping, they got a letter saying, okay, now you're getting this amount and then get in a contract and 14 to 21 days later, we'll have the rest of your money.
Is this the eminent domain where they're doing the loop for
off there, a service road,
Oakdale, that area?
Yeah, the Clarabelle and all that stuff.
Okay, yeah. So they're finally starting to swallow up some land so they can start that in the next 30 years.
Well, they've been. So. I think a lot of people are upset with the prices they're getting, and we'll talk to Mead about what's that. Because I don't know what's a value
and how you establish the value.
Yeah, exactly. That'll be this weekend, 12 to 1, and then Saturdays 10 to 11.
Yeah, we're not going to be kicked out for.
I don't think
a football game.
No, I don't think there's something in Munich.
No, I think they're all back. I think they're going to be in Mexico, which is actually still at the same time.
Good.
Isn't that cool?
Yep.
All right.
All right. Well, thanks for being here, and thanks everybody for watching. We really appreciate you.
We do.
And we will talk to you later.
Have a great weekend, guys. Go out and buy and sell homes.
And there's a lot of open houses this weekend. Go out there and get, look at them, get qualified. Rates did drop this week and last week, but things are going to continue to be better. I saw FHA in the low 5s the other day.
Wow.
Yeah. So it's going to get better. And then think about it. You could buy that down. If you say you had a 5.5 FHA, you bought it down 3.21. That's like 2%. 2 in the first year.
The first year, that's great.
3 the second year, 4 the third year, and back to the 5.
Yeah,
that gives you a lot of time. Or just buy the rate down with some money from the sellers, just permanently to 4
right away. There you go.
Because that's a great rate. All right, everybody, make it a great day.
Make it a great life.